Well, we were waiting for a hot inflation number, and we got it. Consumer Price Index up on a core basis, excluding food and fuel, 3.8% year over year. That is the biggest increase going back to 1992. But of course, we got to put this all in context. And to help us do that, Claudia Sahm is with us. She is senior fellow at the Jain Family Institute and former Federal Reserve Economist. Claudia, it's good to see you again. And I know, we tend to obsess over these monthly numbers. I know that you look at it in a much sort of bigger, longer, broader context. So put this in context for us, given that.
Right. Well, the first thing I would say is we need to be watching these monthly numbers. We knew that they were going to be coming up. I mean, this is part of the economy getting healthy again. So the first context we have to keep is we have to remember what happened last year. We were in a very bad place. The economy was not moving on a lot of dimensions, whether it was prices or employment or just our daily lives. And so what we're seeing now is an economy, people coming back out. We need this. This is a sign of health. Now, we do need to monitor the risk. The Federal Reserve looks at these subatomic particles of this release and anything about inflation because we don't want this to get out of control. We have a tiny bit of comfort today. We saw inflation step down on a month-over-month basis, but two data points, couple data points, no trend here, right? So we need to understand inflation is going to be higher this year than it's been in the past, and that's a sign of healing. This is not as worrisome unless it gets out of control as some people make it sound.
But Claudia, it's still another month of really strong gains in food at home and food away from home. At what point does this impact consumer spending?
Well, I will say, as was mentioned before, the Fed looks very closely at core inflation, but I want to be clear that what they target, what they are really aiming at is to keep all prices stable. So they do look at food and energy. They think about the fact, we have some supply chain issues that came up within food, in particular in some of the processing plants recently. So they look at all of this. But the fact of the matter is, if you look back over time, food prices, gas prices, they go up, they come down, they go up, they come down. If you kind of strip those out for the big picture, the core it gives us a better picture of where inflation is headed. And that is the question on everyone's mind. Is it going to start cooling off some?
And, Claudia, from the Fed's perspective, Brian was talking earlier about how we don't have an Evans rule type situation here where someone has said, when this happens, we will do that. Do you think the Fed has made their life a lot easier by bringing in the average inflation target and not having any kind of hard trigger for when they might, begin tapering asset purchases or raise rates, so on and so forth?
Right. The Fed needs to have flexibility. This is true in the past, and it is absolutely true right now. They are going to watch the data, watch the world unfold, and adjust. They gave us some pretty clear guidance last year and a big shift in saying we want to see 2% on average. We need to remember last year inflation year over year was running at about 1%. This year, where it's at, and I think, frankly, where it's going to be through the end of the year is around 3%. 1 and 3, average 2, right? This is what they were telling us as guidance. They're not going to give us a specific rule because they need to have discretion. But frankly, I think at this point, markets are starting to figure out what the Fed's plan is. It's a new one. It has some risks attached to it, but they are going to bat for workers because they have a dual mandate, and we are millions of jobs short.
And on that last point, we're all talking about inflation a lot. There's a big debate about it being transitory or not. As we all sort of fixate on that, what is the other thing or things that you're watching that you think maybe the bigger narrative is missing because of the, focus on inflation?
Yeah, I think there's a big opportunity cost on our time right now in terms of so focused on inflation. We knew this was coming. The rescue package pumped out another $2 trillion into the economy. We knew there'd be demand. You can only spend your stimulus check once. Unemployment benefits are going to run out in some states this month. What we should be talking about are the infrastructure plans, the investments in people. We need to do that really well, and that's about supporting longer-term growth. right? We should stop relitigating the rescue package and look forward and really focus on getting that done and getting it done well.
Well, we'll see if Washington can do that, let alone other economists. Claudia Sahm, thank you so much. It's great to see you, Senior Fellow at the Jain Family Institute.